Welcome again, students. In this video, we will going to continue chapter Sources of Finance for a Joint Stock Company. In last video, I was discuss about joint stock company and sources of long-term and short-term source of finance. Now, I am going to talk about long-term source of finance in detail. First one is equity share. First one is equity share. Issue of share is the most important method of raising long-term funds. Shares are the ownership security and share capital represent the owner's capital. Funds raised through the share provided a financial base of the company. So, equity shares basically shareholders are the owner of the company. They are the most powerful shareholder of the joint stock company. Okay, these shareholders have right to vote in meeting of the company. So members in a company appointed high post are selected by the voting of the equity shareholders. Okay, etc. Now we will move on preference share. Preference share. Preference share are the shares which carry certain privileges of preferential right both regarding dividend and the return of capital. Okay, so students, preference shares get a fixed rate dividend before paying dividend to equity shareholder. This is the preferential right priority to preference shareholders. This preferential right can be disadvantage or it can be advantage for preference shareholders. Now, how can it be a disadvantage for preference shareholders? Suppose company earn a lot of profit, but the preference shareholder will get fixed rate of dividend only. It has no share in excess profit. So this is the disadvantage because only fixed rate dividend rate is received by the preference shareholder. But sometime the same features becomes its advantage because in such a way that the company may not earn profit. The company may not earn profit in few years, but the preference shareholder has to get the fixed rate of dividend. Okay, now we will move on types of preference share. Types of preference share. Okay, preference share can be following types. One is cumulative and non-cumulative preference shares. Cumulative preference shares generally are the shares if the company has not been profited in any year and no dividend has been received, then later later years if the company earned profit, then profit of last year with the current year profit pay to preference shareholder, cumulative preference shareholder. Okay, non-cumulative non-cumulative preference shareholders are the shareholders they not received any dividend any year dividend, then they cannot receive previous dividend in the following years. Okay, secondly, participating and non-participating preference share. So participating preference share are the preference shares which after receiving the preferred dividend, they also share in the additional profit. On the other hand, non-profit participating preference shares receives only the preferred dividend. No additional profit is received. Okay. Now, next one is convertible and non-convertible preference share. So this is very simple. Holders of convertible preference shares can get shares converted into equity share. Preference shareholder can get converted into equity share. Yes, after a fixed period. Yes, these are the convertible. Preference shareholder that not converted into the equity share after fixed period of time, that is non-convertible preference share. Okay. Now, last one is redeemable and irredeemable preference share. The redeemable preference share are the shares which that can be bought back by the issuing company within its predetermined maturity period. On the other hand, irredeemable preference share या non-redeemable preference shares are those preference shares those cannot be bought back till the company is going concern and in existence. Okay.